Welcome back, everybody, to another deep dive. Today, we're going to be trying to get into the mind of macro analyst Luke Gromen.
Yeah, he's kind of developed this reputation for connecting things that seem completely unrelated, and anticipating big shifts in the financial world.
Exactly. And I mean, he's been especially, spot on during those really volatile
Oh,
periods.
absolutely.
Yeah.
Those crises.
Yeah.
Yeah, when things get crazy. He's the one who's kind of got a good grasp on what's going on.
Well, and that's what we're going to be trying to uncover today. Like, how does he see the world working?
Hmm.
What's he been warning us about over the last year?
And what should investors be doing
Right.
about it?
So first of all, let's just talk about Luke Gromen. Who is he?
So he's not just some guy on TV,
Yeah.
he's got serious experience.
Right.
He spent years as a partner at places like Midwest Research, Cleveland Research Company.
Oh, wow.
Yeah, like big time research firms where his insights were very sought after.
By like real movers and shakers.
Absolutely, like major investors.
So this is someone who's been, down in the weeds, like analyzing markets and advising clients.
Yes, at the highest levels.
Okay, so this isn't just some, guy with a blog or something. This is,
Oh, no, no.
okay, all right, I got it.
This is the real deal.
So this is where it gets interesting, because Groman's been talking a lot about this idea of a broken equation
Yeah.
at the heart of the global macro system.
Rules don't apply anymore.
Yeah.
And he really emphasizes this point that global central banks stopped buying US Treasuries around 2014, about a decade ago.
Right.
But US debt has just kept on skyrocketing since then.
So somebody's got to be buying it.
Exactly. So who is
Wait,
it?
at what cost?
Right.
Yeah.
It's like a game of musical chairs. When the music stops, somebody's left holding the bag.
Oh, yeah.
And Groman believes this is what's causing all this dysfunction in the markets.
Like what kind of dysfunction are we talking about here? Give us an example.
So look at that crash in long-term treasury bonds in Q3 of last year.
Yeah.
Almost 20% drop in a single quarter. I mean, that's unheard of.
Right.
He sees that as a direct symptom of this broken equation.
So how does this impact like regular people like us?
Well, that's the scary part, because Groman's saying this basically guarantees higher interest rates.
Oh boy.
Because if there's all this debt out there
Right.
and less demand for it, the price to borrow that money is going to go up.
Makes sense.
And then higher interest rates have a ripple effect everywhere.
Yeah, it's like squeezing a balloon. The pressure's got to go somewhere.
Right.
So we're talking more expensive borrowing for businesses, consumers.
Right.
It impacts housing.
It can slow down investment.
It can even stifle economic growth.
Exactly.
Wow.
And if you're an investor holding on to these traditional assets like stocks and bonds, ignoring this is basically like driving with your eyes closed.
You're living in the past.
Yeah. You're just assuming the old rules still apply.
Yeah.
And when this thing adjusts, you could be caught completely off guard.
So we need to wake up and realize that things are different.
The game has changed.
Okay. All right, let's shift gears a little bit here and talk about the US dollar.
Okay.
Because, a lot of people think a strong dollar is a good thing.
The sign of American power.
Yeah, stability.
Stability.
But Groman's got a different take on this,
He does.
doesn't he?
He does.
He actually thinks we need a weaker dollar,
That's right.
not a stronger one.
He says it's actually a matter of national security,
Really?
which sounds kind of crazy, right?
I know. It's like everyone in Washington's obsessed with,
Dollar dominance.
yeah, keeping the dollar on top.
Right.
But he explains that a strong dollar makes it really tough for U.S. companies to sell stuff overseas.
Because it makes their goods more expensive
Right.
for buyers in other countries.
And it hurts emerging markets too, right?
Absolutely. Because they often borrow in US dollars.
Yeah.
So now it's way harder to pay back those debts.
So his big concern is that this strong dollar is actually destabilizing the entire global system.
Because it creates this pressure cooker where everyone's scrambling for dollars, which can lead to financial crises.
That's not good.
No, it's not.
So tell me about this meeting between Biden and Xi Jinping.
So back in late 2022, Groman tells this story about how they met up.
Okay.
And apparently the strong dollar was like the big elephant in the room.
Really?
It was a huge problem for both of them.
So both the U.S. and China were feeling the pain.
Yeah. The U.S. needed a weaker dollar to help its exports and ease the pressure on all these emerging markets that are struggling.
Makes sense.
And China needed a weaker dollar to stabilize its own economy and become less reliant on the dollar.
Wow. So what happened? Did they like make a deal or something?
Well, Groman thinks they must have, because in the months after that meeting, the dollar weakened significantly. And you saw rallies in things like gold, Bitcoin, even the Japanese stock market.
So it's like something happened behind the scenes.
It seems that way.
We're not saying it's a conspiracy or anything,
Yeah.
but it does suggest that the dollar may not be as invincible as we think it is.
Exactly. And if Gromen's right, the U.S. government might be willing to sacrifice some of that dollar power,
To achieve other goals.
like boosting American manufacturing
Right.
and easing geopolitical tensions.
Okay, so we've got this broken equation, this strong dollar, that might actually be a weakness.
Mm-hmm.
What else has Gromen been focusing on over the last year?
Well, let's talk about the Fed.
All right, the Federal Reserve.
Yeah, officially they have two mandates, right?
Right, keep prices stable, meaning control inflation,
Mm-hmm.
and maximize employment.
Those are the big ones.
Those are the ones we always hear about.
Yeah, but Gromen argues there's a hidden third mandate,
Oh.
keeping the Treasury market functioning.
Because that's the lifeblood
It is.
of the U.S. financial system.
Absolutely. Remember back in 2023?
Yeah.
When we had that massive sell-off in long-term bonds?
Oh, yeah.
And then suddenly the Fed pivots on interest rates,
Yeah.
and Janet Yellen shifted Treasury issuance to the short end of the market.
It was like they were facing a meltdown.
They were.
They-
And Gromen says those moves weren't about inflation at all.
It was all about saving the Treasury market.
Exactly.
Hmm.
And this raises a big question. Can the Fed actually fight inflation?
As aggressively as they say they can.
As much as they claim.
Right.
Because they have to worry about this Treasury market.
Because they might be trapped.
They might.
They can either try to control inflation and risk a Treasury market collapse,
Right.
or they can prop up the Treasury market and let inflation run wild.
That's his point. He believes that their actions show that they've already chosen to prioritize the Treasury market,
Wow.
which means we could be in for a long period of high inflation,
Even if they say they're fighting it.
even if they claim otherwise.
Okay, so we've got this broken equation, a strong dollar that might actually be a weakness, and a Fed that could be stuck between a rock and a hard place.
That's right.
What does Gromen think we should do to prepare for this?
Well, that's where his views on gold and Bitcoin come in, and that's where his playbook gets really interesting.
All right, so that's what we're going to dive into in the next part of our deep dive.
We'll be right back. Welcome back to our deep dive into the mind of Luke Gromen.
All right, so we've been walking through this idea of like the system being broken,
Yeah,
the strong dollar being maybe not so strong,
right.
and this whole issue with the Fed and whether or not they can actually control inflation.
Absolutely.
So now let's talk about what Gromen's been saying about gold and Bitcoin.
Yeah, over the last 12 months, this is where things get really interesting.
Okay?
Because he's been talking about central banks hoarding gold.
And they're not doing this because they just love shiny things, right?
No,
Like, what's going on here?
he thinks they see gold as like a neutral reserve asset,
Okay.
like a safe haven in a world where the dollar's grip on global finance is loosening.
So they're preparing for like a shift in power?
Exactly. And he's not just speculating. He points to the massive increase in gold purchases by Russia, China, India
Wow.
as evidence.
Okay, so this isn't just like a theory. This is actually happening.
It's happening.
These countries are actively moving away from the dollar.
It seems that way.
Okay, so it's really fascinating is this story that Gromen tells about China actually settling some of their oil trades in gold.
Yeah.
Because nobody wants yuan.
Right.
It's like we're going back to the gold standard.
Well, not exactly, but it shows you that gold is becoming important again on the global stage.
Right. And then there's Bitcoin.
And then there's Bitcoin. He's
Oh.
famously said that Bitcoin does a lot of the things that gold does, but better than gold.
Okay, hold on a second. How can Bitcoin be better than gold?
He sees Bitcoin as a harder currency than gold.
What does that mean?
It means the supply is even more limited
Okay.
and predictable.
Right.
And he points to its performance over the last 13 years.
So again, he's looking at real-world data.
Real world data.
He's not just coming up with theories here.
He thinks Bitcoin has the potential to outperform gold over the long run.
Okay, so all this is very interesting, but like, let's get practical here. What's the average investor supposed to do with this information?
Right. How can we actually apply this to protect our money and maybe even profit from these shifts?
Yeah, let's talk strategy.
All right. So first and foremost, Gromen stresses the importance of being unleveraged,
Unleveraged meaning.
meaning get rid of debt,
Okay.
like the plague, especially when it comes to investments.
So pay down those credit cards.
Yes.
Get rid of that car loan if you can,
Absolutely. You don't want to be overextended when things get bumpy.
because they're going to get bumpy.
He's been warning about this.
Yeah.
And remember, this is especially important in an inflationary environment
Why?
because the value of your debt is decreasing
Right.
while the cost to service it is going up.
So it's a double whammy.
A double whammy. Every dollar you owe is losing purchasing power as inflation eats away at it.
So before we even think about investing, we need to get our own house in order.
Absolutely. Step number 1.
Okay, step number 1, get out of debt.
Step number 2.
Okay.
Consider shifting your investment strategy away from traditional assets that are really vulnerable to inflation.
Like bonds.
Like bonds. Gromen is very bearish on bonds.
Really?
He thinks they're in for a very rough ride as interest rates rise and inflation eats away at their value.
He even calls them certificates of confiscation.
That's right.
Ouch.
Holding on to bonds in this environment, he says, is like picking up nickels in front of a steamroller.
Okay, so you might make a little bit of money in the short term.
Yeah.
But you're going to get crushed when the system adjusts.
Right. So instead of bonds, he recommends focusing on assets that have historically held their value
Okay.
during these periods of inflation and economic uncertainty.
So gold, Bitcoin, commodities.
Exactly. He calls these hard assets.
Okay.
They're much less susceptible to manipulation by governments and central banks.
So let's talk about gold. Why is Gromen so bullish on gold?
He believes that gold is making a comeback as a key reserve asset in the global monetary system.
Okay.
And he points to those record gold purchases by central banks,
Yeah.
especially in Russia, China, India.
So they're putting their money where their mouth is.
They are. They're not just talking about it. They're doing it.
Right. And he even told that story about China using gold to settle oil trades.
It's a really powerful sign that the world is looking for alternatives
Yeah.
to the current dollar-dominated system.
So gold is a hedge against inflation,
Yes.
a store of value,
Yes.
and potentially even a currency
Potential.
in this new world order.
It's a safe haven asset that can protect your wealth from inflation and geopolitical instability.
Okay, so we've got gold, we've got Bitcoin. What about these industrial stocks?
Right. So remember, he believes the U.S. is on the verge of a manufacturing renaissance.
Okay.
He sees this shift happening away from globalization
Right.
and towards a more nationalist economic policy.
It's like we're bringing back Made in America.
Exactly. And he expects significant investment in sectors like manufacturing, infrastructure, energy.
So instead of investing in, tech companies that are building apps,
Right.
we should be looking at companies that are building factories and power plants.
That's the thesis.
Yeah,
He sees this as a major opportunity for investors to capitalize on this reshoring trend.
But not all industrial stocks are created equal.
Of course not.
Right.
He recommends focusing on companies that have strong balance sheets, a history of profitability,
Okay.
and a clear plan for how they're going to navigate this new economic landscape.
So do your research.
Do your research.
Okay.
Investing in individual stocks always requires careful research and due diligence.
Okay, so we're back with part 3 of our deep dive into Luke Gromen's macroeconomic playbook.
We've talked about how he sees the system as being fundamentally broken,
Right. The challenges with the dollar, the Fed's limitations.
and we've looked at his recommendations, gold, Bitcoin, industrial stocks.
So let's try to bring it all together now.
Yeah.
What are the key takeaways for everyday investors like us? Where do we even begin?
Well, Gromen's mantra is really clear.
What's that?
Be unleveraged
Unleveraged meaning get rid of debt.
as much as possible. Pay down those credit cards.
Okay.
Minimize those student loans. Get rid of that car loan if you can.
It's like building a solid foundation before a storm.
Exactly. And remember, this is especially important in an inflationary environment
Why is that?
because the value of your debt decreases while the cost to service it goes up.
Oof, that's a double whammy.
Yeah, a double whammy.
Okay.
Every dollar of debt you have is losing purchasing power as inflation eats away at it.
So step 1, get your financial house in order
Absolutely.
before you even think about investing.
Then step number 2.
Okay, what's step 2?
Start thinking about shifting your investment strategy
Away from
away from those traditional assets that are vulnerable to inflation.
So like bonds.
Bonds, yeah, Gromen is very bearish on bonds.
He doesn't like bonds.
He thinks they're in for a really tough time as those interest rates rise and inflation continues to eat away at their value.
I think he called them certificates of confiscation.
He did. He said holding on to bonds right now is like picking up nickels in front of a steamroller.
So you might make a little bit of money at first, but
You could get crushed.
yeah, when the system adjusts.
So instead of bonds, he says, focus on assets that have historically held their value.
Okay, so gold, Bitcoin, commodities.
Exactly. Those hard assets.
Yeah.
Things that are less susceptible to manipulation by governments and central banks.
All right, so let's talk about gold a little bit more.
Okay.
Why is Gromen so bullish on gold?
Well, remember, he believes gold is making a comeback
As it,
as a key reserve asset in the global monetary system.
right?
And he points to those record purchases by central banks,
Yeah.
especially Russia, China, India.
They're walking the walk.
They are. They're putting their money where their mouth is.
Yeah. And what about that story about China using gold to settle oil trades?
It's a huge sign that the world is looking for alternatives to the dollar.
So gold is a hedge against inflation,
Yeah,
a store of value, and potentially even a currency in this new world order.
it could be. He sees it as a safe haven that can protect your wealth from inflation and geopolitical turmoil.
Okay, so gold's looking good. What about Bitcoin?
So Groman sees Bitcoin as offering a similar hedge against inflation,
Okay.
but with the added benefit of being a decentralized digital asset.
So no government or central bank can control it.
Exactly. He says Bitcoin's fixed supply and its decentralized nature make it the ultimate hard currency.
And he thinks it could actually outperform gold in the long run.
He does. He believes in Bitcoin's long-term potential, even though it can be volatile.
All right, so we've got gold, Bitcoin. Let's get back to those industrial stocks.
Okay.
Why does he think those are a good bet?
Well, remember, he believes the U.S. is on the cusp of this huge manufacturing boom.
Yeah, like bringing manufacturing back to America.
Exactly.
Yeah.
And he expects tons of investment in sectors like manufacturing, infrastructure, energy.
So instead of betting on tech companies building apps, we should be looking at companies building factories, power plants, that kind of thing.
That's his thesis.
Okay.
He thinks this is a major opportunity for investors.
To profit from this resharing trend.
Exactly.
But he did say not all industrial stocks are created equal.
Of course not. You got to do your research.
Right.
Find companies with strong balance sheets, a history of profitability, and a solid plan for navigating this changing economic landscape.
So we need to do our homework.
Always.
All right, so we've covered a lot of ground today. Gromen has definitely given us a lot to think about.
He has. What are the big takeaways?
Well, I think first and foremost, the world is changing,
It is.
and the old rules of investing might not apply anymore.
Yeah.
So we need to be prepared for inflation volatility, a shift away from the dollar.
Absolutely.
Second, prioritize getting rid of debt and start building a portfolio that can actually protect your purchasing power.
Like gold, Bitcoin, and industrial stocks.
Exactly.
Mm.
And third, don't be afraid to think outside the box.
Roman's ideas might not be for everyone, but they challenge the conventional wisdom.
Yeah, it's a good reminder that we need to be flexible, adapt our strategies as things change.
Exactly. This isn't a set it and forget it environment.
Nope.
You got to stay informed, be nimble, and be ready to make adjustments as needed.
Well, this has been a fascinating look into Luke Gromen's world.
It has.
We've learned about how he sees the macroeconomic system, what he's predicting for the future, and his advice for investors.
And hopefully this information can help us all make better financial decisions.
Absolutely. Knowledge is power, especially during times of change and uncertainty.
So keep exploring Gromen's work and stay informed.
Because this deep dive doesn't end here.
That's right. The best way to predict the future is to understand the present.
Thanks for joining us.
It's been a pleasure.
And remember, stay curious, keep learning, and always be prepared to adapt.